They call it F.A.N.G's fall from grace. The tech giant, all in tech giants plural, I should say, all or near bear market, down double digits from their 52-week highs as Washington regulators target big tech. Those declines amounting to nearly $500 billion in lost market cap as the scrutiny grows, with Google parent Alphabet taking the biggest hit of $173 billion just since April. So, are these stocks dead money, Pete?
I don't think they're dead money, but anytime it's regulatory issues, that is something that really does alarm me. And it's something concerning because if the government decides to get involved, that really does change the equation. This isn't any longer just about how these companies operate. It's how the government thinks they should be operating. And that's concerning to me when they decide to jump in there. So I'm more concerned, and rightfully so, I think, based upon what we're seeing. Google makes the most sense to me, that they're getting the most attack. Facebook probably next. I own Facebook, so I'm not very happy about that. Netflix, on the other hand, I don't see that being as big of an issue because I think there's enough competition out there that that's less of an issue. So I'm still long Netflix. I don't plan on getting rid of it anytime soon. Facebook's another one where I'm keeping a very close eye on it, but I don't think it's time to jump just because it's gotten pushed down.
You guys are F.A.N.G guys. I'm more of a MAGA guy. You know that. So I think, what's really interesting in this whole conversation is that Microsoft is really not going to have those same headwinds as far as regulation. And obviously, the relative strength by Microsoft is just crazy. I just want to say one thing about Netflix is that really interesting to me, that stock has been range bound in a very tight range. It showed this amazing relative strength. Obviously, it's kind of come back down from the year ago levels, but it doesn't seem too worried about this Disney threat.
All right, our next guest says F.A.N.G is dead money, with the exception of one stock. Let's go off the charts with Todd Gordon, founder of TradingAnalysis.com. Todd, what are you looking at?
Hey, Melissa. Yeah, let's take a look at the original F.A.N.G here. And what I've done is taken a percent change chart from January of 2016. And this chart really kind of struck me. So Jan of 16 is somewhere in here. So this is like the zero line, right? So up to today, we have four stocks. Obviously, we have the haves and we have the have-nots. We've got, no surprise, Netflix. We've got Amazon. We've got Facebook, and we've got Google. Google's only up like 30 or 40% since 2016. It's amazing, where Netflix is up like 225%. So what we're going to focus on, Dan was just mentioning, a lot of relative strength in Netflix, but we'll get there. So let's get off of this, and let's just take a look at the F.A.N.G, this NY F.A.N.G index over Netflix. And before we do that, I want to make another point. A lot of people are talking about the underperformance of F.A.N.G in the last couple of months. It's been underperforming since 2018. If you were to put the NDX, the NASDAQ 100, on top of this, you will see that the NASDAQ made a new high where the F.A.N.G index has not made a new high. So you've had F.A.N.G underperforming vis-a-vis this index for a year and a half now. So I think that's pretty impressive. But Dan just hit the nail on the head there. This is Netflix in blue, showing a lot of relative strength to that F.A.N.G index. It is quiet, it is in a range, but obviously the market's in a lot of volatility right now. So if things were to stabilize, if this is not just a short covering rally, a break certainly above 380, very easy to say. That was going to be one of my talking points, that it's handled the Disney news of streaming extremely well. I'd expect the bottom to fall out of Netflix. So might be a little breakout trade through 380, and then you get that round number through 400. Buy stops will go off. I think I'm going to take a shot there.
Todd, does a trading range in and of itself make you believe that it will break out, or could it be in a range for a very long time?
I mean, it can't be range bound forever, right? Especially a volatile stock like this. So yes, ranges will end, especially in the massive swings that we've seen in the broader indexes. So the fact that it's not breaking down, yeah, I do think we eventually will break. We have to, unless they delist it, which obviously that's not going to happen.
All right, Todd, thanks. Good to see you. Todd Gordon, TradingAnalysis.com. All right, that's a fair point. Trading ranges have to end. The question is, do you believe it'll end to the upside or to the downside?
Netflix, it should end. It should conclude it to the upside. If you think about a trade, is not much of a headwind for them. They get caught up in this, and anytime they sell off on trade, you should be a buyer of Netflix. There's no real negative trade influence for Netflix. And when you look at the F.A.N.G stocks, there's nothing on Congress or on Capitol Hill that should affect Netflix. So I think they get thrown in. Every sell-off is a buying opportunity. Where Dan started the conversation about Disney, I think people are just going to have a bunch of these little packages where it's streaming. They have $10 a month here, $15 a month there. So I don't think Disney is saying that people aren't going to have Netflix. They'll have both.
I own Disney. I own Netflix. So I see the competition there, and I think at some point in time, Disney will start to really be something that's going to be a thorn in the side of Netflix. I just think that's down the line. That's why I think you can still own both, because Disney has enough other factors that are moving it to the upside. But Netflix, I got to tell you something, that competition is going to be real. And there's only so many dollars that can get spread out across the streaming world.
Pete wasn't on our conference call today when you brought up Disney and the strength you saw there.
It's remarkable how well Pete wasn't on the conference call because we do the conference call whilst
Whilst
the
halftime report is in progress.
session. So it would be difficult for him to do both. Although I'm sure he'd be able to do it given the opportunity.
I could probably do it from the
With
seat.
that said, though, it is the strength of Disney has been pretty remarkable given the move we saw from 118 to 136. It hangs in. Let me say this about Facebook, though. We mentioned it the other day. You had a huge volume day a few days ago in Facebook, traded 3.5 times normal volume. 165 was a 50% correction of the December 24th low and the recent high. I say if you want a risk reward, for the first time in a while, I think Facebook shakes out pretty well on the long side.
Yeah, so back to, obviously, MAGA. We got to talk about Apple in this conversation because I think what Steve was just saying about Netflix, they don't have to worry about trade and they don't have to worry about regulation. We know why Apple trades the way it does. It does trade on the trade issue. If that gets resolved, this stock is not going to have the regulatory issues, and that stock is back above $200 pretty quickly, in my opinion, because I think that
Why wouldn't they have the regulatory issues? Haven't they already said, or
they're out in
reports.
front of the privacy thing. I think Tim Cook has set the agenda, and he's actually really helped the regulatory framework of the way Washington is thinking about their competitors. I think they think that they have the hardware, they have the combination of the software, and they can dictate how their products are used.